Hello and welcome. This is week ending August the 26th, 2016. Three more trading days left until the end of the month. Let's take a look at all the different time frames, short term, long term, midterm, all that good stuff. Not technically not every time frame, but a lot of them. And I last left off last weekend with a daily chart, this chart here, and well, key support level hit before. This one is where it broke through on the Monday session. 4 consecutive down days, finishing off Friday with an up day, but a very dangerous bearish candle. Not like it was the day before, which was more neutral. But when you have situations where, say, you go up, down, then you could oftentimes, or sometimes, maybe not oftentimes, but you can have times where you have an up candle, say something like this, and then maybe something like this to reflect the last chart, and you're like, oh, that's a bearish candle. Okay, well, what's the situation? If it was that last one, it's really not that bearish, but when you go down, then back up, and down again, which is pretty much what this is, then yeah, it is a bearish situation. And as I stated it last week, if it breaks through this level, which it did, don't be surprised to have a fast move down to 18 or the high 17 area. And that's where I think it's in play. And it's probably got another 3 to 5 days to reach that point. So I'm going to stick with what I said then as the probability. But on the contrary, say a situation comes up where the opposite happens and it's starting to go up, reaching into the high 18s, 1890, 19 even, then I'm going to have a huge change of thought, considering this is most likely developing a failed breakdown, which would most likely result in a breakout. And I think of that because when I see situations like this that look so obvious and oftentimes are very profitable and are obvious, when you see 70% probables, when the 30% plays in, that's what I'd be looking at. And I'm thinking it's even closer to 75 to 80% of a move short term going to 18 before this thing really breaks well over 19. And yeah, so I'm just going to leave it at that because it's just playing in, as I was stating before, very nicely as far as chart analysis is concerned. Now, as far as the short term is concerned, I'm going to show Friday's session in here from 9:30 a.m. to 2:30 p.m. You have a move from 1852 to 1905. That's about 53 cents. Well, that's about 3% of an up move. That obviously got destroyed. And this is priced through taking the SLV data and multiplying 1.05116. And why did I take that number? Well, I just looked at what I thought the 4 o'clock silver price was, which is pretty close to being right. And I divided it by the 4 o'clock SLV price, which was right. And well, that's the number that came in. This number used to be lower. I'm going to talk a bit about this, the difference of SLV and silver price after the short-term charts are done. But you see a situation as far as chart analysis is concerned. You have the move, then your first retracement back to the band, supporting at Fibonacci from about 10:30 to about 11:30, so for about an hour or so. Then it breaks down, fast move to next Fibonacci, very little support at the next one, but then fast move again. What follows after that? Perfect Fibonacci resistance, staying within it. And then ending the session in a very low downtrend, but it just kept going sideways after it, and really no reason to show from 2:30 to 4 o'clock afterwards. So that's, and a lot of times when I see charts like this, and it's very often where you see moves that just do this and just settle. The same thing on the downside, where they just settle. Most of the gains or losses come back. I often think it's like they're trying, they as in the ones that have the biggest availability to bet on this thing, aka the big bankers, where they know, okay, well, we're going to just bring this thing higher, then sell her back off. And what's the whole point of doing this? Well, let's get a whole bunch of short-term shorts on the way up to get them to cover it on their stops. Obviously, it's going to be a bad play for them, but that's what we're going to try to do. And while we're doing it, let's try to trap some longs in here, and in here, and in here. Let's trap a few longs, and there you go. You got a little bit of small bits from everybody, and then the club or whoever you want to call those people, they made a very small chunk for the day, just sort of like a bear getting their salmon, just getting what they need, their daily fix, if you will. That's how I perceive that to be as a possibility. So that's just that. I'm going to show this now in Canadian dollars. And the up and down moves all the same, but the Fibonacci works a little bit differently. So let's now bring this up, priced 24 and different, a little bit higher. It was at 25, 26, mainly from the months of July and August, so it's been retracing a little bit. I was also talking about that when I recently, a month and a half or so back, showed the Canadian chart, that it looked like a little bit of a pullback was happening, and that's really what's coming into play. But in here, you can see it stays within the key Fibonacci support. So going back to that, the SLV and the silver price ratio, what I did is I downloaded the SLV data, and I got every single day going back to 2006 when it started, and I'm dividing the silver price by it. And this is what I'm going to come up with. This is 2006, and this is today. So over 2,500 trading days. Just put this chart up really quickly. The orange line is the 40-day moving average. And this thing goes up and down in chunks with the ratio, like moves going down here. Reason for that is I'm getting SLV data at 4 o'clock, and the silver spot price, it's a combination of data closing at 5 o'clock and 2 o'clock. So yeah, maybe at 2 o'clock silver was $20, and then when the SLV closed, silver went down 2% from that point. That's common, and that's why I have these up and down little moves. I'm going to just change the price scaling a little bit here to show it a little clearer, and you can just see the uptrend of this orange line. So it's just at this around the same rate of ascension, it's taking you out. So if you're playing the SLV as like a way of holding it for just buying your shares and holding it for years and months and that type of stuff, well, you're losing about 0.5% a year or so, which is definitely uncool. And for day traders, you're holding for a few days, you're losing fractional percents. And some days you're going to get hit hard. And some days you might get a little bit of help as they pretty much manipulate things. And this is just one form. I do not trust any paper form, and I should just get that out of the way now. Holding the actual physical metal is the way to go. And that's my view, and I'm not the only one that shares that one as well. So now let's just move on to these charts again. Let's move on to weekly. And you had this big move, which got up to the upper band, well above the 18 average, a little bit of time correction, and now a few weeks, about a month or so of price correction as well. Now bringing it down to the lower part of this 18 average band, focusing on the lows. Well, when you have a situation where you have those 3 key lows and the highs way up here, you're probably going to make a higher low, and it's going to at least be here. But regardless of where it is, the key thing is you make a higher high. That's the impressive part, and you'd be looking for another leg lower. Will this be the bottom? I don't think it will. I think it's going to be making it down to this area here at least. But obviously, as I stated before, if it just starts to go up and this does work out, well, it'll look very similar to here because it's pretty much right here in the same situation as it was right back in here. But it's also the same situation. Actually, I can't see any similars other than that. So that's the weekly chart. Let's move this on to the month time frame. And this is where you can see it can still go down lower. And in fact, if you want to play this by the textbook and hope that the textbook works with you kind of deal, you want this thing to go down to here. Or even down to the 16 2/3 level for 1665. Why is that? Because reversal of trend. Downtrend, band starts to go sideways, establish resistance, come back to support. You don't want resistance to be too high. This is about perfect. Because in here is just a little too low from where the 18 average is, so I can't count that. So this whole 21 level is perfect for it. And what's perfect for textbook to play again is to come back to this band, which would be a situation where you would maybe consider a buying opportunity, but what you'd be more looking towards is for it to hit it first, then break the 21 level, looking for pretty much quick moves higher, because you're in the situation where if that happens, it goes down to 17-ish or anything like that, where it reaches this band, then breaks higher a few months later. You're hoping to buy when you see it at like 21.50 when the daily and weekly charts are looking good. And then 3 weeks later, it's like 250 higher, $3 higher. That's the type of things that you're really trying to look to get with these types of patterns, basically. Let's put in the 3-month chart now, because here's what's interesting. For the month of August so far, with 3 days trading remaining, down $1.73. And last month it was up $1.73. It's at exactly where it was when June 30 closed at this point. Of course, it's not going to finish at this price most likely because of the 3 days left. But I thought it would be an interesting looking quarterly chart, so I wanted to bring it up, and well, most certainly it is. So let's show her. Fibonacci retracement being used, $3.97 from this low, not from this one, because it didn't really do a heck of a much from this point, and this is where it broke out from. It wouldn't change it much if I used like the 350 lows from 93 and the $50 high from 2011. Fibonacci retracement, the key first one, down 1895. That's where it is, which for 1, 2, 3, 4, 5 quarters in a row was support, with each one in here that contained a lower high. Really, it's a descending triangle, something like that. This one broke out to the downside. But since that point, if of course it continues higher, this is the classic move, a failed move, fast move. But I've talked about that for a while, and I'll continue to talk about that on this time frame for a while as well. But it's now at a very crucial point at 1862, or pretty much at 1895. Again, you got these higher lows like I was talking about on the previous time frame. It looks like it's in the area where a higher low would probably be played, and there's a lot of room for this thing to go up. I even stated that earlier when I was looking at the Fibonacci from the $13 lows and the $50 highs at the 23% mark, which is where it's at. It's got a long ways to go towards the upside, looking at it from this time frame. Now I want to take a look at this a little more clearly. I have the opportunity to zoom. I'm going to show you what it looks like. Just like that. But I can't really zoom in on the right-hand side, so I've already drawn an image for it. So I'm going to do that. And there's the zoom part. Just so we can take a look at the last few months a little easier this way. So there's how the support was being held within this mark. A running average from the low price of $4. So since the last 20 years, the average person that bought is pretty much at even or barely above. That's another key reason to go long when you're in the inflationary market. But here it is exactly at that key point. When you have the support like this, that little bounce dip from this point, you break above it, come back and find support, and a move higher. Man, that is so bullish on a situation like that. That's what would give reason for like having like a 1-year move going from 24 to 40 or even higher. Not that big of a surprise. But again, that's just on the key area. Now, again, I want to talk about from the daily time frame. Here's that situation I talked about at the start of the video, where it goes higher, straight up, where it goes higher, and then comes back down a bit, because that's exactly what has taken place so far. So I don't look at this as a bearish candle. But what I do recognize this is the following. Significant moves lower. Well, that can create either one of two things. Either one, a bullish setup, sort of like a cup and handle formation that could brew. Situation two, possible failed breakout. So that's on the lower moves. Obviously, the first one's bullish, second one's bearish. Upside from here, as I was saying before, well, that's just making that higher low at the major level, thus telling me this is a failed move and that a fast move would probably be following after that. Wow, that was a lot. And a long video. I haven't done one in a while, but I also wanted to test to see how well using different computers, newer computers and older computers would work within the upload. So I think it did pretty good. Obviously, you see, and this means that it uploaded well and fine. And I'd like to thank you for tuning in. Have yourself a great weekend. Bye-bye.